but you have these two green up candles, and then these are all really flat inside of those two up. So what that could tell us is we have a very short, small move up, maybe back to this line. Yeah, so I just had the Apple chart up. Just, one thing you guys were just talking about is, what was the market going to do? Were we going to get a little bit of a relief rally continuation? And one of the things I was just noticing on Apple, and we know Apple is kind of the leader of the tech world, as often the market will follow. But what you can see here is there's a gap fill just up a little bit more, around 170, 145 to 50. So it does kind of make sense that this data we just got could be a little bit more positive. We still see the S&P down, but not by as much. And then if we get that little bit of dovishness from the Fed today, I could see Apple surging up towards that level to fill. Now, it's not that far. It's only about $1.50 higher. But we know gaps are meant to be filled in general. And I think one of the things to remember is that in general, gaps, when price gets closer to gaps, it works like a magnet to almost suck it towards it and pull it towards it. So as close as we are in Apple, it would be a little unusual not to see it fill within the next few trading days. But yeah, interesting today with
how would you approach it with puts?
Yeah, so I think basically what I'm going to look to do is look to short it or buy some puts once we get up into that level, because I ultimately am bearish on the market. I think that, the market's in this weird phase of saying, can the Fed engineer this soft landing without, collapsing the economy into recession? And I think later this year we get into a point where the market starts to realize that we are going to go into a recession, whether it's late this year or 2023. And the question then that's going to freak out the market is, how does the Fed save us? If inflation is still 4 or 5%, they can't really come out gangbusters and print our way out of it. So do we get into this kind of stagflationist type scenario? And I think that's really the scary scenario for the overall equity markets. To me, so basically when I'm looking at this chart, I'm seeing a macro bearish pattern, right? So we have this down move with this bearish pattern, which looks like it's starting to break here. We then have another micro bearish pattern, which is this big red bar with these little inside bar ones. The only positive to it is you can almost make out a mini micro. And this is getting into really kind of like short time frame stuff. But you have these two green up candles, and then these are all really flat inside of those two up. So what that could tell us is we have a very short, small move up, maybe back to this line, before the micro and the macro bears start to take hold and we go back down and start to collapse. So it would almost, I feel like this is almost too easy, where most investors are looking at this and saying, oh, that's an obvious bear flag. And usually it's got to flip those people out by popping up just a little bit. Right. It's almost too obvious. So, and the other thing on Bitcoin is, talk about just dead. It's really remarkable to see the Bitcoin chart over the last 7 days even, but even over the last, since June, considering the equity markets have been more volatile than Bitcoin for the most part, which is very unusual. I don't know if there's been a point in history where for months you've had, a bigger bounce in the NASDAQ, for instance, than in Bitcoin. And I think that tells us a couple things, right? It tells us, number one, that people are a little kind of, iffy on crypto because of Celsius, because of Terra Luna. Yeah, you're 100% right. And then the other side of the coin too is I think we're getting closer and closer to that regulatory clarity, right? And so no one the big money at least was kind of like, listen, we're not going to take a position until we get a little bit more clarity, since we know it's coming sooner than later. We hear from Gary Gensler. He's been talking more and more about Bitcoin being a commodity, but everything else kind of a security. So what does that mean for an Ethereum? What does that mean for the whole space? So I think those kind of are keeping money on the sidelines. My hope is that, and again, I'm a long-term Bitcoin bull, that once we get that clarity, the market, and you know this, Dale, is like the market hates uncertainty, and that goes for crypto, that goes for stocks, every asset. So even if the regulation that comes in maybe isn't viewed as amazingly good, it might be the clarity that helps now bigger money say, okay, at least we know the rules. Now we can decide to allocate capital to cryptocurrencies. So for me on Bitcoin, I have it priced to go down to about 12 to 13,000. I feel like a lot of people are saying that level now, which makes me nervous that it could go even lower. But basically, I'm a dollar cost average person. So when I start to look at a long-term investment, I'm not the type to just go all in at one level. I like to kind of divide that amount of money that I'm going to invest into 6 parts or 5 parts, and I just kind of space it out. So for Bitcoin, 19,000, I even started to nibble a little bit, and then I'll probably do 16, 13, 10, 7, kind of, just little bits and pieces along the way where as long as that long-term thesis of Bitcoin holds true, I'm okay being out of the money in the near term. Yeah, it has. The only thing investors would want to be careful of is the merge, right? So how much of the upside that we've seen has been a kind of buy the rumor of the coming merge, and then do we see that kind of, okay, the merge is gone, happened, it changes how Ethereum is and everything, but does it really change the psychology of investors? And that's where I would argue that it may not. We know that I think what they're doing is going to be long-term bullish for Ethereum, but in the short term, everything is ruled by fear and greed, right? So right now, fear. And so I do worry that once that happens, you'll see people saying, okay, it's over, let's exit and kind of dump it out. And I wonder if it does come back down. So for me, at least Bitcoin, Ethereum, I have a target of around 600 and change. So it gets down there, I definitely start accumulating. I know that seems like a long way from here, but if we look at the NASDAQ, right, and here's the QQQ, you can't tell me that the bear market's over yet. I mean, I'm just not buying it. Considering the Fed has really put on the stoppers in terms of printing of money and pulling out liquidity and raising interest rates. And so I got to believe the NASDAQ's going to make lower lows even over the next 6 months. And if that happens, I don't understand how Ethereum would still hold above those recent lows. Same thing with Bitcoin. It's got to go below 17.5 because again, we just know that it's a risk asset and it's going to, if the NASDAQ's going to drop down here, which is kind of my target, then I got to believe that those cryptos will make new lows. I would just say in regards to the dollar, a lot of people are calling for a big break on the DXY. I have kind of a resistance potential double top up here until proven otherwise. I'm going to go with that. And again, I just kind of go with what I see. And what you can see here is on the longer term chart, let me get rid of my 200, is you have this pivot right from here, which goes back to 2001. And then there's a secondary trend line here as well. I believe this is the line here. Where we're kind of right into that point too. So that's a big resistance point for the dollar, and you still have a double top. So I'm in the camp where, it may be kind of a little bit of a fake out push up here, and then we could see that leg down, which really should be in the near term slightly positive for equities, at least you'd think. I do. We did hit kind of my first target of this pivot point, which was around $85. I still am in the camp where I think it likely will head down to about 76, 77 going into the midterms. Now, we're not that far away at this point, but I still think that that's a decent chance. But yeah, I mean, it's been an amazing move down. And again, the one thing I'll show people, and let me just get rid of some of these lines so we can really see the beauty of the charts, is just always remember that parallels are so powerful in trading. And this is my favorite parallel. You take the low from 2009, this kind of kisses right here in 2016, and you pierced in COVID, but if you take the body low and then look at how you connect, and it's a perfect parallel line to the Russia invasion high of 130. And then, I mean, again, just reversing. And by the way, with parallels, the beautiful thing about it is usually the highs will note extreme greed. So when we were at 130, I mean, you even had big banks like Goldman and other players saying 200 or higher. And the public was just so bullish. And for me, that's always a trigger where I start to think the opposite. And then when you have a chart that confirms that, it makes it a much easier trade to kind of pull the trigger on, for me at least. And that's where you get your kind of your discipline and your emotional control in line, where you start to kind of say, okay, when everyone else is saying something, let me be cautious, and then let me look at the chart. Do the charts confirm my cautious nature? And if you get that, then it's usually a really powerful signal.